Hedge funds have been a popular topic of conversation in recent weeks. Citadel, Melvin Capital, BlackRock, you name it, and somewhere out there a retail investor is researching it. They partially contributed to the 2008 housing crash and recently lost billions to numerous online Reddit patrons. But who is in charge of all this money? What does it mean to invest in a hedge fund? Many have stated the tactics used by hedge funds seem like market manipulation or gambling, as if to say they use the stock market as a giant casino. Despite recent exposure on their questionable tactics, the concept has existed for over 70 years. But let's talk about something, or more specifically, someone, a little more current. He's a frivolous philanthropist. He's a titan of the industry, and he's expected to testify soon at the House GameStop hearing. This man is Kenneth Griffin. Money Talks, Wealth Whispers. My name is Connor, and I am fascinated by billionaires. How did they get so rich? Why is it so hard to get there? What advice can they give to the rest of us? That's what I'm here to find out. Join me each week as I examine a new member of the world's elite in the hopes of uncovering the secrets to vast wealth and study today's events to grow tomorrow's money. This is Billionaire Brainstorming. Ken Griffin has found himself at the center of controversy regarding the recent and dramatic fluctuation of GameStop's stock. For those of you who listened to last week's episode, you might recall that Citadel, the hedge fund managed by Griffin, is a key investor and contributor to the commission-free trading app Robinhood. This is exactly what has Griffin appearing before the House. According to an article from Yahoo Finance, Griffin is among a few other key CEOs appearing before the House that will offer lawmakers a chance to understand what happened on the market last month. Government investigations aside, Ken is no stranger to making things work during hard times. According to his bio on the Citadel website, he started trading stocks in college from his dorm room with a fax machine. It is worth noting that he started with $250,000 he raised from various family sources and 2 outside investors, according to Bloomberg.com. He's also a man of discipline and legacy, as he earned his bachelor's in economics from Harvard University and graduated in 1989 after only 3 years. Shortly after graduating, he moved to Chicago to work for Frank Meyer, founder of Glenwood Capital. Less than a year after that, he opened his own hedge fund, now known as Citadel, with only $4.5 million. Considering his net worth today is about $20 billion, that's nothing to sneeze at. Shortly after starting his hedge fund, his financial success continued as it delivered an annual return of just over 25% for the subsequent 15 years. However, much like the currents beneath the surface of the ocean, life can have some unexpected changes.
On the NASDAQ with Scott Walker. Scott?
All right, Mary, thanks so much. And just a note on those circuit breakers, just want to point out here that the NASDAQ does use the same circuit breaker as the NYSE in case there was any question regarding that. NASDAQ, as we said, fully open, down 6%. That is a loss of 100 points. Just let me also point out that the Friars Club did the open this morning. I don't know if it's a good morning for a laugh or not. Perhaps we all are going to need one after the day today. But let's take a look at the big cap technology stocks here.
Down more than $4. Traders here working the phone say a lot of their customers are freaked out, waiting
waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC.
Yes, down here actually amazed and impressed that the markets didn't do actually worse. The spiders were fairly accurate in where they priced pre-opening.
Thank you very much, Rick Santelli. We have all 30 Dow stocks open. The Dow is down 436 points. I don't know whether all 500 of the S&P stocks are open. It is down 47 3/4. The futures are pretty much, after a big dip, down to minus 68 or so. They are back to more or less minus 60. It's an extremely volatile situation. NASDAQ Composite has come up. It slows down 86.5. So,
in 2008, everything came to a halt. The housing market crashed, banks lost billions, and millions of Americans suffered foreclosures. Citadel didn't suffer the worst. Then again, a loss of $9 billion is not something to dismiss. As various bailouts and economic recovery plans rolled out, Griffin continued to work with his team, who he stated to Bloomberg was, quote, better at trading than him, and 4 years later, all losses had been recovered by Citadel. That still doesn't answer the question of what a hedge fund actually is. First, let's discuss what it means to hedge an investment. When a person hedges their investments, it essentially means they're playing it safe. Instead of investing in a volatile penny stock or a trendy company, they go with something more stable, like a utility company or something not as vulnerable to dramatic market changes. Hedge funds are no different. However, many hedge funds have different styles of investing, which often relates to their classification. Furthermore, many hedge funds cater to specific clientele mainly due to the risk involved in some trading styles. This might explain why the recent boom in GameStop was such an issue for funds like Citadel and Melvin Capital. These funds did what is known as shorting a stock. In layman's terms, they essentially bet that the stock would decrease in value as GameStop prepared to declare bankruptcy. The benefit of making such a bet is that these funds would maintain the legal right to buy large amounts of this stock once it dropped to a certain value, and once it goes up again, they can sell all that stock for a profit. However, since they hedged a large portion of their clients' earnings on the presumed drop in value, and it never reached the target number they needed, they lost tremendous equity as the price was forced up by the Reddit community. This realization is what sparked controversy once Robinhood and a few other trading platforms halted trading on GameStop stock, as many felt it was unfair to retail traders. What do you think? How would you react if one of your biggest clients was losing billions to a bunch of hardy and jovial retail traders? Would you stand by the principles of the market and let the chips fall where they may? Or would you hit the emergency stop button in the interest of maintaining a multi-billion-dollar business connection? Let's focus on the facts. Ken Griffin has shown us that tenacity and a little charm can give you the kickstart you need early on. And sometimes it's okay to rely on others, especially if their skills can benefit you. If you want to go fast, go alone. And if you want to go far, go together. Until next week, this has been Billionaire Brainstorming. If you like the show, follow the podcast on Twitter @BBStorming for updates each week. And if you'd like to support the podcast, consider becoming a patron on Patreon at patreon.com/Billionaire Brainstorming. Thanks for listening.